All right. Hey, everyone. Good afternoon. It is 3:15. Um, Markets have been closed here for an hour and a half or so, or I guess about 2 hours, I guess it is. So let's just jump right into it and take a look at what the action is. As bearish as prices seem to be, we're actually starting to think that this move to the downside might be done, but there's some conflicting signals here. So we'll just kind of walk through them. All right. So first off, from the big down day that we had last Thursday in soybeans, right? This one took out the prior day's high, took out the prior day's low, took out a whole bunch of closes and accelerated to the downside. We have this gap right here, and then we have today where it looked like it was going to rally on up. And grains really got going early last night and into the night, and then just reversed about 4 a.m. and started coming lower. So, but the way that we got down to here today gives us a little bit of pause to think that we're just going to accelerate down. But we can't ignore the fact that we have a big outside day down here. We have a gap, and now we have another outside day where we took out yesterday's high, took out the low, and the full body here just blew everybody out to the downside, right? So it looks to us like this initial move down here may be coming to an end, and we may very well be ready to rally and come back on up here. And part of what's given us that thought is the fact that we're in a 2 here. And then a week ago or 2 weeks ago, we thought, hey, we're going to move this on up higher, even though some of the shorter term indicators are showing some exhaustion. We were clearly we were right and then wrong, right? That's what's hard about this business is you can be right for a day or two, and then the market can take your rightness right away. And so this is what happened here. And so the question is, what's going on? If you remember, when this move happened, we thought, oh man, we're going to go higher. That's because this blue 1 had turned into a blue 3 right here, okay? So this was 1, this was 2, and now we have a big blue 3, and we were ready for a wave 3 explosion, which might move higher. The problem with that is that when we look at the shorter term charts, what we saw at the time this move started to happen was some divergence action, and we also saw 5s on the shorter term charts. So I'm going to go down to the 240-minute chart here so you can see that. So this is the first move higher where the 3 on the daily chart began, and this was a 5. So you can see this 5 just kept extending over and over, which is fine because sometimes these 5s can move a long way. But an ideal setup for a wave 2 position would be not for this 5 to be here on the short hour on the shorter term stuff, but actually a 0. So what we have here today is a 0. We had this market reset, came all the way down, and got itself a 0. Now, could this be a bigger move to the downside? Yeah, it can. I can't really argue that with the daily chart the way it is with this signal, the gap, and now this one. That's pretty bearish. But what's bullish is that this is a wave 2, that we are above the daily cloud, and that the way in which we got here on a 60-minute chart was actually pretty grindy, two-sided, and choppy for most of the day, even though we ended up down, right? So this was real impulsive. I mean, straight down here on Monday, and now this one is a little bit choppier. So sometimes a C wave and an A wave, if the A is steep, C will be a little bit less steep. Now we have a 0 on the 240, and we have a 0 on the 60, which is this one. So I think that what we're running into here is a exhaustion of this first down move, and we're ready to push this thing back higher. How much higher do we go? I don't know. But on the daily chart, if we do start working higher, we actually end up with we could actually end up with a 3 beginning with a refreshed and reset shorter term stuff. So I think it's prudent to wait just a little bit and play the long side here on beans for longer to make sure that doesn't come into fruition, because if it does, then it could really get explosive to the upside. And what would cause that? Because hey, if you look at the weather, it's raining, it's cool, it's not bad. Well, what would cause that is a yield like 50 or 49 or something less than what the market is expecting. And if the market gets whiff of that and decides to price it in, then it's going to start working higher. Okay, so we're going to say that we have a bullish bias in beans, but obviously it's a wounded bull, right? Because of this price action down here, and we need to see pretty much immediate strength up and out of here before for us to stay bullish. So tight stops, nice risk reward. The long side is where we want to play beans. Okay, corn. What about corn? Right? It had kind of a very similar pattern today as soybeans did. Big outside day down. Couldn't hold $5. It settled at $4.99 3/4. Oh my gosh, the world is going to fall, and we're going to go to $3 immediately, right? I don't think so. I don't think that the fundamentals really support that yet. In order to get there, we have to have a huge yield and bad demand. And like beans, the yield just doesn't seem to make sense because you have Iowa and Illinois in so much worse conditions than we've had over the last 5 or 6 years, where they had the yield to really support bad weather in other places. So if the I-states in great condition supported bad conditions in states like North Dakota, Minnesota, and Nebraska and South Dakota, so if the I's are powerful enough to overcome the bad in those states, then isn't the opposite true, that bad conditions in those two states are powerful enough to negatively impact the yield in order to hold that thing down? And when you look at good to excellent ratings in the 40s compared to the mid 80s last year, it makes you wonder. Obviously, today that's a losing argument. The last 7 days, that's a losing argument. But I don't think that argument goes away just because price action heads down. So we're at an obvious pivot point on corn, right? $5 is pretty simple, but I don't think that it's worth playing the downside because it's just too early and there's just not enough fodder to go for it. I think we need more news because remember, we really could have a lot of wild cards in play still in Europe. Okay, let's look at Kansas City wheat. Here's December wheat. Really choppy day here too. I think it was up 20, 25 or something like that in the overnight, and then closed way down here. Obviously traded a huge range, and it just seems to be the norm for wheat. So it's just exceptionally difficult to trade. And here we are, just right back to the bottom of our range. We really didn't hold anything. We did break our trend line. We did break out the bottom of our cloud, but here we are in a wave 2 position, and just like corn, wheat, and beans, all three of them are in 2s. So blue 2, and blue 2, all the way across the board. So I think it still pays to assume that higher prices are coming, even though we need a catalyst to help speed that up. And maybe that catalyst is coming yet this week. We just don't know. And maybe traders will start to say, hey, the weather's been priced in, yields have been priced in, peace in Ukraine has been priced in, and now we need to go back to trading something a little bit different. We'll wait and see how the market reacts to it. Very, very choppy, very difficult to trade, very tough stuff. So get your bias, stick to your bias, and trade your system the way it's supposed to be traded, and just stick with it. Right? We are in an absolute war of patience, and the bulls are tired, the bears are tired. The range traders are tired. Everybody's tired of the way these markets are trading because they're very, very difficult, and they are and they're just somewhat unpredictable at the moment. But we'll stick to our guns and stick to our systems, because eventually they'll kick back in and we'll revert back to kind of some normalcy, and they'll start working. But for now, we'll stick through it. And if you're super nervous, get protection. If you're super nervous about the upside, buy it. Don't hesitate. Get protection on. Just make sure that your farm is positioned to gain revenue when the market goes up, and not lose it too bad when the market goes down. That's your job. That's our job, and that's really pretty simple. We don't have to be right every second of every day. We just got to play the long game and keep with it. So I know that's a broken record, but for these 10 minutes, that's how we're going to stay. So I think that we're finding solid ground here, and we're going to turn back higher, but time will tell. All right. That's it for today. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great night. We'll be back with you tomorrow or Friday, depending on market action and what's necessary. If you have questions, please don't hesitate to call. Have a great night. See ya.